Hey, what's going on, guys? Welcome back to another pre-week market analysis here. Corey Smith, Core FX, coming to you through T3 Live here on YouTube. Thank you guys very much for tuning in again. We do these videos every weekend to get you ready for the markets for the week ahead. Go over a little bit of everything in this video, covering what happened last week, top performing and underperforming currencies, what happened in the news, as well as the data coming out of each individual economy affecting each individual currency. I checked some technical analysis on the charts of each individual index for each of the pairs, and then I go into the week ahead, what we want to look for, what news events we got going on, and really just get a little bit of a bias to get the week started, to have an idea of the direction we want to be looking for things to go in to start the week. Trading is a game where you're constantly on your toes. You have to constantly be able to adapt and change with the markets. So what we do here is try to just get an idea of what side of things to be on to get started, and things can quickly change at the beginning of the week, and we could adjust our outlook and our game plan, but having a game plan to start the week is essential, and so that's what we do with these videos. Also, anyone that doesn't like trading news events, you can find everything worth paying attention to here, or if you like trading news events, you can find the news events worth trading around, as well as my general bias as to where I think things could be heading. All right, so starting off this week, it is Saturday, December 9th, but this is for the week starting on Sunday, December 10th, and covering the week prior, beginning on December 3rd. So last week performance, you can see a lot of red here on this chart. That is because these currencies are all weighted in a basket against the US dollar. So the US dollar was the top performer of the week, and these were all underperforming because the dollar is what they're compared against. But you can see here, Swiss franc, Aussie, and CAD all were the worst performers, with the yen and the euro not too far behind. And then we had the dollar, pound, New Zealand as the top performers. Even though the pound and New Zealand dollar did underperform, they still were better performers than the rest. So dollar led the charge. US dollar strength was really the story of the week here, for the most part in the currencies here. Taking us over to the charts, beginning with the US dollar. We saw this downtrend that got broken as we formed a new uptrend that then got broken again to come back down, and then last week to start the week we were in this low base here on this strong support with this red daily line here, and we thought that with the SMAs crossing, price trading below the 50 SMA and 20, we could see another move to the downside, but we got just the opposite, and we saw a strong dollar all week, and it rallied back up to this really strong weekly level here that was the neckline of our inverse head and shoulders, and back at it again with the head and shoulders. Now you can see this pattern forming here with a potential another head and shoulders forming here. As you can see, this is not valid yet. It's potential setup, as we don't have the actual right shoulder formed yet, but price rallied strong all week, hit this really strong resistance zone that we've seen a lot of price reaction off of, and could swing lower to come down to retest this neckline. If that's the case, then I will be looking for the pattern completion and a break of this neckline for the dollar to continue lower, or the dollar can break this resistance, and then we can have this uptrend we started here back in action. All right, so taking us to the euro. Euro broke the upward trend line that we were following this week. So we were making higher highs and higher lows. Coming into this week, we were right up here. And price, not much movement. You can see very small, indecisive daily candles, but we did trickle lower back down to this 50 SMA here. This could just be a correction, and it could continue higher, or we could see this continue to roll over. All in all, not too clear of a direction here, but this upward trend line was broken, and we're now sitting on the 50 SMA. Japanese yen. Last week we had this trend line invalidated back to the downside after this strong upward move, and then this week we had a break lower of this support and a continuation down. We're now below the 50 and 20 SMA and the 200. The 20 SMA is starting to curl back around, and I'm seeing more bearishness now out of the yen, but again, not a very clean chart, not a very clear trend, so nothing too crazy. British pound, we saw this strong move upward last week, and then we were kind of sitting up here. And we did have the correction that we kind of thought we would get. It's still in this very strong weekly zone. I am expecting a bounce and continuation higher this week. We'll see if we actually get it. It is in a high base, though, on a strong zone. And really what I'm watching with this pair is this 132 resistance level up here because if we have price break this level here, as you can see, going back to the Brexit fallout over here, this is going to set a critical breakout point where really now we have a lot of upside up to really 136. So from 133 up to 136, we have a whole open space here on this chart with not much area to slow it down. So I can see this 132 breakout being a strong bullish move um, out of the pound. So we'll have to wait and see if that does happen. But that is the most significant level I'll be watching for on this chart. Taking us to the CAD, we had a strong sell-off this week from the CAD. As you can see here, we hit this resistance, it's a weekly zone, also on the 50 SMA, and moved back down to the bottom leg support of this now bearish rectangle that we've got formed here. Still in a downtrend. We still haven't violated the lower high or the lower low, so we're just range bound at the moment for about a month now, and I will be looking to take this to the downside if we see a break of the 76.50 support here that we're sitting on. Swiss franc, another one that had been in a strong downtrend, then came back up and sharply moved back higher again, and then we were testing the 200 SMA and it sold off and now broke this upward trend line we were in and has now moved back below the moving averages and back down to retest this support level. So we could see a continuation now to the downside out of the Swiss franc, but again, pretty choppy, sloppy price action we've been seeing here out of a lot of these pairs. Aussie is still the cleanest. I've been saying this for a while now. I've loved this chart, and we are still seeing this clean movement out of it. We broke this support, which was also a trend line. That was a low base within this downtrend. We now have the 50 crossing the 200 SMA. That right there is a very significant death cross, it's called. We broke below this support. We broke down here. Strong, nice breakout within a downtrend. Set a new lower low. I will be looking for the Aussie to continue weak this week. Could come up to retest this before rolling back over. But we do have a pretty strong weekly support and weekly trend line here that we're coming down to test. So this could be a strong area for it to need to break. So we could see a bounce back up before it staggers a little and possibly breaks lower. And then that takes us to New Zealand dollar. And the New Zealand dollar is still in this downtrend. We still have it sitting along this support at the 68 level. Range bound still. I am still very actively looking for a break of this to the downside below 68 as I see a very strong follow through out of New Zealand dollar if we are able to break this support, as this has held for a number of weeks, months, years, and it has attempted and failed to break this zone multiple times. So if it does actually break through, I think we can see a really strong continued move to the downside. So that takes us on to last week and what happened around the world. So beginning with the 3rd last week on a Sunday, not much going on. Pretty uneventful as I covered last week. Not looking to trade on days like that. There's just not enough liquidity or follow through on any moves. Especially being a trend trader, we need momentum to have these trades really work out for us. So I avoid trading any illiquid times when there's not much going on. Especially Sundays when the market's open in New Zealand and Australia and then Japan, and there's just not too much liquidity going on. Took us into Monday. Started with Monday, not very eventful, but still good to keep an eye on the overall numbers coming out of Europe. But Spanish unemployment rate was really good. The unemployment rate was expected to be 54,000, but it actually was only 7, which is a really strong reading. Continued strength out of the Eurozone is really what this is telling us. After that, we moved into the construction PMI, Purchasing Managers Index, out of the construction sector, and it was the second beat in a row. So again, we're still seeing continued strength out of a lot of the sectors in the UK, which is great for the pound as we near these Brexit negotiations. Also, what happened on Monday was we saw a strong move from the pound as the Brexit. Actually, we had a strong move to the downside of the pound. Sorry, because as we saw the week before, we saw a strong upward move as they potentially had reached a deal on Brexit. However, this week we saw the Irish Prime Minister spoke out on Brexit, mentioning that there really wasn't a deal being made between him and Theresa May in regards to Ireland's border and how they're going to deal with the whole Brexit negotiation and leaving the Eurozone. So the pound did see some weakness as anything really related to Brexit or data at all out of Great Britain, UK area is causing a lot of volatility in the pound. Just with Brexit looming and everything going on, there's a lot of big changes going on. It's really presented some choppy moves, but some awesome trading opportunities as well. Um, then we had New Zealand dollar Spencer, the filling in head governor of the Reserve Bank of New Zealand. He spoke about the complications of having low inflation, saying that they're going to have to adopt a more flexible approach to inflation targeting. We saw a stronger New Zealand dollar after this. So this was one of those governors, Reserve Bank, central bankers speaking that did cause some movements in the FX markets, and that's because he was talking about inflation specifically. After that, we went into Australia dollars, current account, and retail sales. Current account missed, retail sales beat, so still seeing a little bit of mixed match data out of Australia. But then we got the Chinese services PMI beating expectations right after, and then we had the Reserve Bank of Australia's rate statement as we covered last week what this was. And as expected, they left their rates unchanged at 1.5%. There's really no clear sign as to when they'll begin hiking again. As they say, everything's dependent on their domestic conditions. But analysts are expecting the first hike in a year or so. The rhetoric that changed since last month's meeting really out of this is they removed the statement saying higher exchange rate is weighing on the outlook for output and employment, which this is just taken as bullish rhetoric. And also, inflation is likely to remain low for some time, also bullish. And they reported that wage growth is still low and employers are finding it harder to hire new skilled employees, which was bearish. So a little bit of a mixed statement, but overall, we did see Aussie strength as a result of this. Moved up about 40, 60 pips initially, as you know they were a little bit more bullish in their rhetoric. And then also we had some more Brexit negotiations facing problems than we had previously heard, as Ireland's border is the center of the debate, and the pound really was just extremely choppy at the beginning of the week. Then moving on to Tuesday, we had the services PMI out of the pound, and they missed expectations, but not really much market reaction. Canada's trade balance beat expectations. Just showing, continued strong data out of the CAD now more recently, as we had that great employment and GDP numbers coming out of there. And then that took us to Australia's GDP, which missed expectations for the first time in about a year, further complicating things for the Aussie, and we saw some more Aussie weakness pushing lower to the downside. And then Wednesday, we had the Bank of Canada's rate statement. Rates remained unchanged again at the 1% after they hiked it twice earlier in the year. There was a slight expectation of after the meeting, there's a slight expectation of January rate hike from the Bank of Canada since we had that great jobs and GDP reports. But the Bank of Canada pretty much shut that down in this meeting. They pretty much just took it off the table almost that January rate hike was possible, helping lead to the fall of the CAD by about 100 or so pips. It was a pretty strong move off of that. And then another 100 pips it moved after the initial leg. So no hints of further rate hikes. Still a number of uncertainties loom for them. So the Bank of Canada pretty dovish here moving forward, as there was some optimism after those strong data reports, but they shut down the optimism and said there's still too many uncertainties for them. Then we had the Australian dollar's trade balance missed expectations. So just adding more fuel to the fire for this week, Aussie this week. Thursday, Draghi spoke, uneventful. Nothing really. We were expecting potential moves off of that, but nothing really too ground-shattering there. Japan had their final GDP, which beat expectations for the first time in over a year. Not much movement, but we are seeing some decent pickup, at least a little bit, out of a stagnant Japan. The yen just continued to remain weak, so good news isn't lifting the yen shows that that's a pretty bearish sign for the currency. And then China's trade balance beat expectations. Here, it was one of the biggest economies in the world, so this is something we watch and keep an eye on. Then we had Jobs Friday. The pound manufacturing production was overnight. It met expectations. Not a very big deal data-wise, but the pound did sell off pretty hard afterwards. Pound's been really volatile pair. As I said, anything with Brexit is sending it all over the place. Good data is typically sending it high, fast, and flat or negative data is typically sending it low, fast. So really just a lot of good trading opportunities out of the pound around events and everything. A lot of volatility, and that's what we want as traders. That took us into the NFP report out of the U.S. A little bit of an odd NFP report falling on the 8th of the month, as they're always the first Friday of the month. However, it's not the first Friday if it falls on the first of the month. So if the Friday is the first day of the month, like it was this month, December 1st was Friday, then they wait till the next week to do jobs reports, just so they have a little more time to calculate the data and all. But yeah, so that is why we had NFP on the 8th, a little bit later in the month. But it was a really, really uneventful NFP. The NFP is a non-farm payroll. It's the monthly employment report out of the U.S. Typically, very strong, moving, very crazy trading event for Forex. A lot of new traders get all hyped up by the moves that they see and trade and lose a lot of money around it most of the time because it's really hard to trade. But unemployment rate remained the same at 4.1%, so nothing really there. Beat job expectations as 220,000 jobs were created, 30,000 more than expected. However, we're still seeing stagnant average hourly wage growth. This is a big number we're watching alongside with inflation, so this number not hitting is not a good sign, and it's really just showing that wage growth is still stagnant and still struggling to go up. However, we haven't seen a strong dollar, but this wasn't a very meaningful report. The Fed outlook really didn't change going into this report. I didn't really expect it to be too crazy of a report, as missed numbers here isn't going to stop them from hiking the rates later on this month, and a beat expectations number isn't going to change their outlook on more hikes or anything in the year to come. So it was really kind of an uneventful event, and not much USD reaction. Then it did move higher afterwards. So guessing this jobs numbers overvalued the slight miss here to the average hourly earnings, but overall investors saw it as bullish for the dollar, so the dollar did move up as a result. That takes us on to this week. Pretty loaded week this week. Again, we are into the holiday month now, so this week really is the last week I recommend looking for trades. After this week, we get into more around the holiday time. This week will be the 10th to the 15th, and then after that we have the week leading up to Christmas, which you can look for some trading opportunities this week, but really things slow down in the markets. If this is your first time trading through the holidays, you'll see things really slow down until after New Year's. And if you're gonna trade, look for only the best possible setups. I know we always only want to look for the best setups, but be even more picky. Be that extra little bit more picky here on out till the end of New Year's, because there's just not much going on. We like trading when there's a lot of movement, a lot of flow, strong follow through with moves. Technical setups are more likely to occur in these involatile times. It's really just sloppy, unpredictable stuff. So just be careful now here on out trading. Starting this week, Sunday and Monday, really. Sunday, though, nothing going on, so don't go crazy trying to look for trades, especially on Sunday, because there's just no reason to. No reason to force them, no boredom trades. I know it sucks all weekend. The markets are closed, waiting for them to reopen, but there's just work on your discipline, and there's no reason to be trading on a Sunday with no events or anything going on. Takes us into Monday out of Australia. We have this business confidence report again, monthly report on business climate measured by surveying businesses. Again, every little bit of data right now is pretty conveniently important out of Australia, as their economy is trying to pick up so they can get back into this rate hiking that the rest of the world is in, but they're seeing some complications. So we'll see how their business confidence doing. New Zealand just had one of the worst readings in a while over there, so let's see if it's translated the same into Australia, as they're really highly related. Takes us into Tuesday. We have a big CPI number out of the pound. This is a great trading opportunity. Price usually moves over 50 pips whenever this happened. They missed the last reading, and the pound did tank. Again, the pound's very volatile around news events, so this should be a good trading opportunity, as it's the UK's most influential reading of the inflation report. This is the Consumer Price Index. Then that takes us into another inflation reading out of the US, the Producer Price Index, so that's going to be the producer side of it, and it's going to be a strong inflation report gauging the production side of inflation. Typically, just like a 30 to 50 pip move. The CPI is going to be a stronger report, but last report beat expectations, and we did see a strong U.S. dollar, but it should be a decent trading opportunity. We'll see if we get a better reading here this month. Then we have Draghi speaking, not really eventful, and then Governor Lowe out of Reserve Bank of Australia speaking. Again, definitely keep an eye on these events, but nothing too crazy. or anything to be really worried about. Then we have the pounds employment report, average earnings and jobs data. It's the data for the wage growth as well as their jobs created. It's very important to the central bank recently and in the future. Um, Pretty much just one of those reports that's always going to be eventful. It beat the last two expectations, but the pound was weak after the reading, so we'll see how it reacts to this. But definitely a strong opportunity trading event, something to have on your calendar and really be aware of going on. And then we have this strong inflation data out of the U.S. CPI, very, very important reading, as expected last reading, so it didn't really cause too many moves. There's a Fed meeting later on in the day Wednesday, so this might not be the best trading opportunity just because everyone's going to be waiting for this FOMC rate statement following it. But it could get us an early move to get into a position prior to the FOMC meeting to get a little bit of a risk eliminated, maybe getting a little bit of profit on a trade prior to the news event, and then that shoot us into profit even further. But we'll see. These are just opportunities and potential how they could play out. And then moving into the FOMC meeting, rates remained unchanged last meeting at 1.25% that we've been at, but it's highly anticipated that this meeting they will hike rates to 1.5%. It's been expected for a while now, so it is already priced into the markets pretty much because it's something that's traded on a daily basis, knowing it's coming. We'll be watching for any change in rhetoric and the outlook for the future rate hikes. As right now in 2018, the Fed's expecting 3 rate hikes, but the market's kind of expecting 2. And expectations are really what we're going to be watching out of this meeting, as we're kind of anticipating a rate hike. Should be a good trading opportunity. I'm expecting the dollar most likely will be strong in the beginning of the week, leading up to it. And then maybe we see a sell-off after it, buy the rumor, sell the news type of deal, but we'll see. Then we have the Australian dollars employment report, another strong report. They missed last month, and Aussie did drop about 50 pips or so, so it should be a strong moving report one way or the other, so definitely worth paying attention to. And we get the double whammy with the industrial production out of China right afterwards. These are both very influential on the Australian dollar, so that could present a big trading opportunity to get into something else around the employment report and then have it follow through with some strong moves off after the industrial production. Thursday, out of the Swiss franc, we have the producer price index readings. Not too much impact over in Swiss franc. Hasn't been too big of a market mover, but could be a little bit of an opportunity and something definitely to be paying attention to. They beat the last 3 readings, so we'll see if they can continue that streak. Then we have the Swiss National Bank's press conference. Swiss National Bank's monetary policy and LIBOR rate, their rate statement. This is going to be occurring early in the morning on Thursday for us. They haven't changed rates in a while. Pretty much left everything unchanged. Last meeting, still intervening in the currency markets as needed. They're happy with the value of the Swiss franc during the last meeting, but it has tanked about 3% of its value since then. So we'll have to see how they respond to this, what they think about the value of the Swiss franc as their intervention in the FX markets, or the currency markets, and their balance sheets and how they position themselves could have some impact on the value of the Swiss franc. So we'll have to wait and see how they report on the changes that we've seen since September out of the Swiss franc and the Swiss economy over there. Then after that, we have the retail sales out of the pound. Beat last month and saw strong pound off it. So we'll see how it reacts this month. But as I said, this is all strong data. Typically, we see some follow through, and weak data typically see a sell off, so we'll have to wait and see. However, this will be overshadowed as well as with the CPI and the FOMC meeting with the Bank of England monetary policy statement that's going to be following after the retail sales. So, Bank of England rate statement. Last meeting, they hiked rates for the first time in a decade to 0.50% to a half a percentage, 50 points. The pound was strong for a couple weeks leading into the meeting and then tanked after, as the Bank of England was expected to hike, but it was most likely a one-and-done type of situation where they're hiking it now and then they're not going to be hiking anything for a while. Very dovish otherwise outside of the hike. This meeting we'll have to see how hawkish or dovish they are moving forward. We've seen some good data out of the pound since then, some talk about Brexit deals being finalized, some drama around it, lots of volatility, so we'll have to see how the Bank of England responds to all this, as it should be a great trading opportunity. Then we have the ECB's minimum bid rate, so a rate statement out of Europe and the European Central Bank. Rates were unchanged last meeting as quantitative easing did get cut back from $60 billion a month to $30 billion a month. However, they extended it through September of 2018 at the earliest. Most likely will go through the end of next year, I'm thinking. And the ECB is not likely to hike rates until 2019 because they're not going to hike in the middle of the QE, as they've said. And Euro tanked last meeting after this QE adjustment, so we'll see how the outlook and rhetoric is in this meeting and if they say anything about the QE here moving forward. Then the US dollars got retail sales. Excuse me. And the retail sales out of the US is typically a decent market mover, nothing too crazy. We did beat expectations last time, but we've been bouncing back and forth with a little bit of mixed readings. So we'll have to wait and see what happens there, but nothing really going on the rest of the week. We have Bank of Canada's Governor Pelosi speaking. Definitely something to keep an eye on. Have noted down and have in our watch list, but nothing too crazy. Manufacturing index out of Japan, and then just some other minor information out of the rest of the world. So nothing really going on the end of the week, but we have a very packed middle to beginning of the week. From Tuesday to Thursday is where I'll really be looking to make trades this week. Friday, Monday, Sunday, not really looking for too much, not much going on. But the bulk of this week will be in the middle of the week, and there will be a lot of trading opportunities presented to us. All right. Thank you guys very much for tuning in. Make sure you catch the next video on technical analysis where I break down the pairs on the technical charts and see what my outlook is to start the week. Thank you very much, guys. Again, this is Corey Smith with CoreFX. Make sure you like, follow, subscribe to T3 Live as well as CoreFX. Thank you very much, guys, and I'll catch you next week.